What's up, Mortgage Coach community? Dave Savage, and I'm with Dan Keller out of Seattle. What's up, Dan?
What's up, Dave? How you doing?
I'm doing good, buddy. Hey, so I have been getting more and more questions where people want to just get into the mortgage strategies. They want to, you're a power user of Mortgage Coach. You're a top producer in your market. By the way, how much volume are you going to do this year? Just to get that on the table for everybody.
Right now, we are the end of August, and we're at 62.2 million right now. So we're going to push 80. Our goal was 75.
Love that.
We're going to beat it. So
love it. Love it. And you're just doing it right. Every family is getting this total cost analysis, which is helping the family make a better decision. It's helping you have a better conversion. Everyone's winning. So walk us through some mortgage strategies, where it's a story like the family came to me, they wanted this, and then this is the TCA, total cost analysis I gave them. Whenever you're ready to show your screen, just pull up your screen and show it. But, walk us through a story. Let's go through 2 or 3 stories and strategies, Dan.
Well, I think let's frame it this way, Dave. One of the things that I love about Mortgage Coach is that when you're meeting with a new family and you're sketching out their mortgage options and the home buying experience, it gives you more to talk about. It gives you substance to your meeting versus like you've given examples in the past of just a notepad or sketching out some numbers up on the board. And so when they're coming in and they're sitting down with me and we're going through a mortgage planning meeting, or even prior to that, I'm able to send them a report like a total cost analysis where I use the terminology like, listen, based on our previous conversation, what I heard you say was that you're looking for a mortgage with approximately $38,000 down, no more than 40, your monthly payment right in the ballpark of $2,600 to $2,800 a month. What I've done is I put together a report that shows you what that looks like out in the marketplace in regards to value. Let me know if you have any questions. We're going to go over this in detail when you come in. But the reason why I love Mortgage Coach is that's an icebreaker that builds rapport, and it also builds credibility right out the gate.
Yeah, no doubt. And when they get to total cost analysis, it's a uncommon level of transparency and advice. So it, immediately it's like, hey, I like this guy. And it's clear that he has my best interest in mind. And it's clear he's a pro because I've never had anything like this before. So let's pull one up, pull up a specific total cost analysis. Tell us, the client situation. I also want to make sure we get the point, because one thing I know you're good at, and I know a lot of mortgage coaches are good at, is not only, transactional details, but what were the family's goals? So it's like when you're giving them the total cost analysis, it's like, here's your transaction details, and here's how my mortgage strategy helps you achieve the goals that you told me about.
Well, so exactly, Dave. So this is an example that I'm going to show you right now is for a client that I just met over the weekend. And they came in, they're buying new construction. They sold their house in another area. They've got approximately $140,000 in the bank. And both of them, which I absolutely love about this, both of them served in the armed forces in the Navy. So one of them has very little income. The other has the majority of the income. And so they came in, they met me, they met the realtor referred them to me, and they'd already been pre-approved with Veterans United, okay, online lender. The real estate broker said, hey, I'd love for you to have a second opinion. I want you to talk to Dan. So what I did is after I learned, what they had in the bank, and this is prior to pre-approval, when I learned the amount of money they had in the bank, what their goals were with this particular home, where they're at in their life with their family and their goals, I shared this report with them, and it's pretty great what happened as a result. 1, I earned the business from Veterans United. 2, we're not going with VA financing. And so what you'll see in this report is VA, and I kept it super clean. We already have a purchase price. So we went with a $640 purchase price. They had their mind set to go with Veterans United at 4.625, paying a point. With VA financing. I showed them another option, which was, why would you use your VA eligibility if you don't have to? And the conventional option is $48 a month, less expensive, and it will save you approximately $17,000 over the next 60 months. And next thing I know, they're taking application. They're already in underwriting. We're expecting the contract over today for the conventional 20% down option versus using VA versus them going with Veterans United and not getting the advice that they deserved up front.
Love it. So great example of just, how they had one thing, you had a consultation, you delivered value, they liked your value, helped you win the business. So great story, great strategy. Any others?
Yeah, I'll share this one. Right now in today's market, this is something that we're all seeing. Dan, I don't know if I want to buy. Dan, the market's, are we heading toward a bubble? We're thinking about sitting on the sidelines and just waiting this thing out. And so I think as a mortgage professional in today's market, you've got to know some of the objections. We're salespeople. You need to know what your home buyers potentially are going to come at you with in regards to objecting to getting approved or objecting to buying right now. And if you firmly believe, I'm up here in the Seattle market, and I do believe that the market will relax a little. I don't like to use the word compress. I don't like to use those types of words up here. I heard a conversation the other day with Jeremy Forcier. I think it's just, it's negative talk, and there's nothing negative about what's going on right now in the housing market and mortgage world. And so what I tell them is that, listen, I totally understand. I would feel the same way if I was in your shoes and if I didn't have the right information in front of me to evaluate. So what I want to do is I want to put together a report for you that's going to evaluate today's market conditions right now here in the Seattle market or wherever you might be. And what I want to do is I want to take conservative projections where the mortgage industry is going to be in the next year and where the housing market here in Seattle will be in the next year. And I want you to be able to look at those and compare those. And then what I'll do in addition to this is I've put together a kind of a flow chart of when anyone asks me, are we heading toward a bubble, or I feel like the market's inflamed right now, I share with them a flow chart that I made explaining what the market looked like in 05 and 04 versus what the market and the economy looks like today in 2018. And that really provides kind of a different viewpoint for the consumer, where they look at things and they're like, wow, it really is different today. Okay, so I have a little bit less fear about moving forward. And then when they see a report like this, so let me pull this one up. This is a $400,000
and by the way, change the layout so that people can kind of see the numbers and the graphs all the same thing, which, by the way, everybody, that's a feature, great feature of Mortgage Coach. So you look at it linear, scroll through it, and you can also see everything in one shot. Love it. Thank you, Dan.
Okay. So what we've done here is, this is the first time home buyer. They have about 5% down. And what I did is I showed them where the market's at today. And $400,000 purchase, 4.375, 30-year fixed. I made this report, full disclosure. I think the date on this is a month or so ago. So these are not current interest rates. Total cash due at closing is almost $26,000. So these particular borrowers wanted to wait to save up a 20% down payment to avoid paying private mortgage insurance. Another great feature of Mortgage Coach, if I click on the More Info tab, I was able to show them that, listen, your private mortgage insurance is only $186 a month for, let's say, 3 years. So I was able to calculate the cost there and show them longhand. But let's come back over here. If you were to wait 18 months to save up 20% down, you're now paying $465 for a house, and you're probably looking at an interest rate in the mid to upper fives. So that $400,000 purchase for $2,450 a month is now $2,636 a month with 20% down. And so, one, you don't need 20% down. Two, if you wait, the cost of waiting is going to be relatively expensive. And so there's a big myth in the marketplace that you have to have 20% down, that in order to get approved, you need a large down payment, and that's just not the case. So again, Mortgage Coach is providing clarity around not only guidelines, but their finances in regards to saving them money over the life of their loan, which I absolutely love about this.
And I think this is a super on-point example, because this is where the Mortgage Coach loan officer can help a family go from confusion to clarity, off the fence and into escrow. So, I mean, this is something that every loan officer can't do at the level of clarity and value that you are. And that gives you the competitive advantage. And by the way, after delivering that kind of value, that kind of advice, one, the borrower is less likely to shop. And if they do shop, they're more likely to stick with you, even if there's a little bit of a difference in rates and fees.
Yeah.
Anything else you want to add, Dan? I want to keep this kind of a quick hit, couple strategies at a time. Anything else you want to add to the conversation?
Yeah, I do, because this is for the mortgage coach community, and I know you provide so much value, Dave, to just the mortgage industry in general. So anyone watching this, I want to monetize this for you, and I'm not here pitching mortgage coach. I get nothing out of this. If anything, I'm giving back slightly in regards to what you've given me over the years. But you guys, this software, literally the 2 conversations that I had with the borrower over the weekend really wanted nothing to do with me. They were dialed in at Veterans United. This software, and let's just use 100 basis points for comp. This software helped me make $6,500. Okay. By converting this these guys were dialed in with Veterans United. By using Mortgage Coach and providing clarity to the consumer, answering my phone on the weekends, giving them advice versus price, it allowed me to make $6,500 extra that I wouldn't have had. So your monthly fee for Mortgage Coach was paid for tenfold just by using the software and being able to convert one more deal.
I love it. And remember, this was one specific strategy. We're not here to say don't do VA loans, FHA loans, and sell out of them. The idea is talk to the family, understand their goals, understand what they're trying to do, and then analyze that. And there's usually a better option. There's usually a better option than what they think they can get. And if you're dealing with a mortgage coach loan officer against a non-mortgage coach loan officer, the mortgage coach loan officer is just armed to deliver better advice and armed to make that visually clear to the client. So if you got value from this, like it, share it. Also, I'm looking for more mortgage strategies like this. So if you have a mortgage strategy that you'd like to share with other mortgage coach members, comment below, even share it. Right now I'm collecting rent versus own analysis and move up analysis or cost of waiting analysis. Anything that helps a family go from I'm on the fence, off the fence, and into escrow. We'd love to see more examples of that. Dan Keller, really appreciate you, brother. Thanks for making time. Oh, you got something else to show here?
Well, you prompted me to do this one the other day, and this is just a screenshot of it that I was sending you. But we get a question a lot. Hey, Dan, I want to prepay my mortgage. Can I do that? What does that look like? So I just jumped into Mortgage Coach, did a total cost analysis for a $425,000 loan amount. If they were to pay $200 extra a month, $400 extra a month, or $600 extra a month, down here, when is their freedom point? So $200 a month is going to provide them mortgage free after 25 years, then 21, then 19. So incredible software, Dave, and it's a credible feature.
Yeah, and by the way, I'm just closing on that one. That's one of those things where I talk to loan officers, well, they don't really have options. They just want this loan. Guys, everybody wants to pay off their home faster. Everybody they don't get loans because they want loans. They get loans because they want homes, and they want to pay it off. So just always showing people the option to prepay or invest the difference and accelerate. Every family wants that. And by the way, when you deliver that kind of advice, you're a wow. You're like, wow. The uncommon transparency makes them believe, trust you. And then the expert advice makes them respect you. And when they trust you, respect you, they're less likely to shop. And when they do shop, they're a whole lot more likely to stick with you through that whole thing. So Dan, thank you. Again, community, if you got value, like it, share it, and collecting examples. I want to do more mortgage strategy conversations like this. So reach out. Thanks, brother.
You got it, bud.